Good afternoon, and thank you for your company for the weekly this Friday, the 23rd of July. My name's Jessica Amir. I'm a senior market analyst with Bell Direct. Well, amid the COVID-19 restrictions, we're bringing you audio updates for the time being. But after restrictions ease, we'll be back in the studio, back to normal. So thank you for staying with us. Let's go to the weekly. Well, in a textbook fashion, healthcare and staples have been the flavour of the week. And buying in these sectors has offset the pullback in mining stocks. So this has helped the broad Aussie share market rise 0.5% Monday to Thursday, taking the ASX 200 to its highest level on record on Thursday. That's 7,386 points. Now, healthcare and staples, they're in fashion because stocks in these sectors will likely benefit from rising earnings and cash flow because half of our population is in lockdown. Standouts in healthcare include the likes of CSL and respiratory product business Fisher & Paykel, FPH. Their shares both rose 4% each. And in staples, grain and cattle business Elders, ELD, and grain company, GrainCorp, GNC, as well as Woolworths, WOW, their shares all rose between 2 and 4%. What's most interesting, though, in staples, despite Woolworths recently spinning off their alcohol and pub business Endeavour, EDV, Woolworths shares, WOW, Woolworths shares roared to a brand new record all-time high. So this is really proving the pandemic is supporting both Woolworths and Endeavour shares, despite the spin-off situation there. And if you look at the charts, you'd notice the indicators, most of them are suggesting Woolworths shares will continue to move further north. We can see it's trading above its moving averages, which is the chart at the top. And the price rate of change indicator, the chart toward the bottom, suggests buying and interest momentum is now building in WOW. But do keep in mind, most investment banks have got Woolies as a hold stock. Now let's pivot to the absolute best performers in the ASX 200 Monday to Thursday. We've got at the top engineering giant CIMIC, CIM. They led the march, rising for the first time in 7 weeks. CIMIC shares charged up 10%. But why? Well, despite the company reporting weaker than expected half-year results, investors looked past that. They really liked hearing that CIMIC's new work orders are above pre-pandemic levels. Plus, project momentum has been building. And although construction we know is now on hold in New South Wales, activity will likely pick up again when restrictions ease. They've got total work on hand of over $33 billion, which is extraordinary. Plus the icing on the cake, don't forget the Olympic Games are being held in Brisbane in 11 years. So CIMIC could be one to watch, possibly expected to win further contracts, infrastructure contracts. Look, either way, right now, as it stands, Credit Suisse, JP Morgan, they both upgraded Citi this week. JP Morgan, the most bullish, a $30 target. Another standout worth mentioning, private health company NIB. NHF is their ticker. Their shares rose 9%. That was their biggest jump in 12 weeks. What was really quite telling was the private health insurance industry has somewhat been resilient in lockdown. We know shares in Medibank, MPL, as well as this stock, NIB, NHF is the ticker, they're both back at pre-pandemic highs. And both stocks are not far off their all-time record highs. Because guess why? Well, many people, they're continuing to pay their premiums. That's supporting Medibank and NIB's earnings growth. And then on the flip side, claims or payouts are down because elective surgery demand is low. Furthermore, Medibank, they've got this new no-gap short-stay surgery business. And this should also drive industry efficiencies and strong earnings per share growth. And that's according to Morgan Stanley. In fact, Medibank's invested about $200 million into healthcare businesses, and that's according to the investment bank. So this strategy is said to really be underappreciated totally by the market. So you'd expect as Medibank's presence grows, its shares will likely grow, and that's according to Morgan Stanley. And if you're a chartist, you'd also like that both NIB and Medibank, they're still looking bullish too. Now moving to what to watch next week and beyond. First, I'd be watching those large stocks that are benefiting from increased vaccination rates in the US. Remember, we've got 50% of the US adult population now vaccinated. A company in the ASX that springs to mind that's benefiting from this is CSL, Australia's biggest healthcare stock, the biggest blood plasma therapy and vaccine business in the world collectively. Now, analysis from Citi, it's shown that the biggest revenue generator, CSL's blood plasma business, is likely to benefit from the reopening of their collection centres in the US. And these sectors, remember, they were shut in the pandemic and that greatly affected CSL. However, as conditions are improving in the US, CSL is now increasingly attractive to JP Morgan and Morgan Stanley, who both upgraded the stock this week. And that supported CSL's shares to rise 4% this week. Look, JP Morgan, they've got a $280 price target for CSL. UBS's bullseye is the most bullish, a $330 target. But diving to the charts, if you're a chartist, you'd notice CSL's indicators are suggesting CSL's shares will likely continue to trade higher because they've moved above their moving averages. That's the chart at the top. And the price rate of change indicator, the chart toward the bottom, that also suggests buying interest and momentum is building in CSL too. So CSL, it's definitely worth a look. Secondly, there's a lot of important economic news out next week. Firstly, you've got consumer price data or inflation, that's out on Wednesday. And secondly, on Friday, you've got the producer price index PPI, that's also out. That'll be really telling to show how much prices are rising for Australian businesses or how much they rose in the quarter. Both items, either way, will be closely watched by the RBA. And that's the weekly with plenty of considerations for your portfolio. Thank you so much for your company. If you've got any questions, please leave them in the comment section on YouTube. From all of us here at Bell Direct, please stay safe and have a happy weekend. I'm Jessica Amir. Bye for now.